Today is actually starting off as a pretty green day. It is 09:56 a.m. My internet actually may go out in the next couple minutes because my internet service provider is actually doing some maintenance in my neighborhood. So fingers crossed, knock on some wood that my internet stays up. Otherwise, I gotta connect my iPhone as a hotspot again like I did in yesterday's video. Welcome if you are new. I am a stock market loving guru, and I'm here to make videos on education purposes and also motivation purposes as well too. Been in the stock market for well over 6 years now. And I have been, when I say I've been in the market, I mean I have not left the market at all. So I initially got in the market during Rona, and I have been in the market since. I know a lot of people, believe it or not, that have been in the market since like 2017, 18, 19, and they are in the market a little bit, out of the market, they're in the market, they're out of the market. People who do that stuff tend to miss out on tremendous buying opportunities and also really miss a lot of learning experiences. Learning experience such as, hey, 2022 was a learning experience for me. 2023 was also another learning experience. 2025 was a learning experience. And this year is another learning experience too. 2024 was actually pretty much like, for me, 2024 was very similar to kind of 2022 in a way. Nobody really wanted stocks. But then in 2024, the market was not really going down like it did in 2022. But the point that I'm making is that it's very important to understand the psychology of the stock market, two, how the stock market really works, the different sectors, and really, you gotta stay in the market, especially during the bad times. We, on the major indexes, it's looking pretty bullish, and I say that very politely because the major indexes are very much in a little bit of overbought territory, especially on the relative strength index. The MACD, the moving average conversion diversion, basically you see this green line and also red line. We don't have a bearish signal just yet of the green line crossing over the red line. However, we are definitely way above the moving averages on the S&P 500. The 50, the 100, and 200-day moving average, and we could have a pullback. So I would love to continue to go to all-times high here. I am a bull in the stock market, and I'm also doing a public account challenge on this YouTube channel. I showed my account yesterday. Today's video is going to be a little different, though. But otherwise, yes, I'm here definitely for a lot of motivation because there's a lot of evil people on social media that will try purposely scare you out of selling your position because they themselves lost money or they themselves are shorting stocks or have puts options betting that the stock is going to go down. A lot of that stuff goes on, and that is why you got to do your due diligence and you got to understand how the stock market really moves. So today's episode is going to be, oh yes, and by the way, this YouTube channel is fairly new, so if you enjoy my content, definitely smash the like button, entirely free, and subscribe if you want to see more content from me. I keep things very real on this YouTube channel. I'm not a fake person. I don't use like very super, it's just very simple, very basic. I've been on YouTube now for 17 years, almost 18 years, depending when you watch this video. And if you watch this video in the distant future, going to be on YouTube very much longer. I'm going to be making a playlist on this YouTube channel. And this YouTube channel, like I said, is still fairly new. My main YouTube channel, NightmareRH, has over 200,000 subscribers. I'm going to be advertising this YouTube channel probably very soon. So right now, it is May 1st, 2026. If you see this video in the next couple months or maybe the next couple years, if the entire world doesn't blow up then, well, then this YouTube channel is going to be rock and rolling. So definitely show some support if you want to follow along. Smash the subscribe button. But today is going to be an education video. And lastly, before I dive into today's topic, I tend to put out videos Monday through Friday on this channel. In the future, I will be doing probably some live streams as well too. So definitely stay tuned for that. Okay, so some education that I really want to go over today is really the different sectors of the stock market, because right now we are very much experiencing sectors rock and rolling and sectors halting, and also sectors primarily going down. Okay, it's very interesting what is happening in the market. Firstly and foremost, I don't mean to insult anyone's intelligence, but I just really, when I do education, I start on the bare bottom. And if you know this stuff, well then, obviously it's just going to be regurgitation, which is also really a good thing because it strengthens your knowledge base as well too. So, I use AI a lot, primarily Google Gemini. I don't know why Google Gemini threw in my social media, but if you do want to drop me a like on X or Facebook, currently my social media is very much video game orientated, but it's going to be doing revamped pretty soon. I'm going to be posting a lot of stock related stuff on there as well. So yeah, I don't know why Gemini literally put in but I didn't ask for it to do it, but it kind of just did it because I was making some cool images before with it as well. But I basically pretty much asked Gemini to draw me a couple pictures of the different sectors of the stock market and go ahead and list some companies as well too. So firstly and foremost, we got the semiconductors, basically the chips. Very much NVIDIA, obviously, AMD, very big position at AMD, I have. Obviously, Intel, TSMC, pretty much the chips, they're hardware, okay? Then you got staples, which is basically consumer staples. You got beverages, you got household items, Walmart, Pepsi, Coca-Cola. Pretty much like it's consumer driven, very like a lot of Russell 2000 companies, the IWM, like the small cap companies are very much like consumer staples. And then another consumer items, basically pretty much Amazon, Tesla, cars, Disney, Ford, like pretty much luxury items like amusement parks. Industrials, pretty much Boeing, General Electric. Pretty much think of them, obviously, very much drew a rocket ship. Replace the rocket ship pretty much with pretty much like airplanes and stuff, right? Communication services, obviously you got Meta, pretty much an advertising company. Obviously you have Google, that's what Alphabet is. Verizon, AT&T, healthcare, self-explanatory. The vast majority of penny stocks are primarily in the healthcare industry. Then you got the energy, you got Exxon, you got Mobil, financials, obviously banks, SoFi, fintechs. Pretty much about like this in a nutshell. Going a step further too, obviously software companies too, SaaS orientated. So why is this very important to understand what is happening in the market right now in 2026? There is definitely one sector that is going to be ripping, which is going to be a lesson, okay? It's going to be a hard lesson for a lot of people. A lot of people are extremely bullish on Meta, Amazon, and Google because they are spending a lot of money on CapEx. Now, Meta, they just came out with their earnings, and they kind of went very much down. Because it looks like their CapEx spending is not producing the same level of returns such as Google and such as Amazon. Amazon and Google, Wall Street is very much behind, and Google raised up their CapEx. Now here's the issue, and this is my personal opinion, but a lot of other people agree with me. When a company spends a tremendous amount of money, it's going to show somewhere. It can't just magically just go away. Sure, you can grow your revenue extremely quick, but what if your revenue caps and then your expenses just, catches up? And then you say, hey, we're not going to spend so much money anymore. So your expenses go down, but maybe your revenue stays high or your revenue also declines. And that's going to take years, if not many, many quarters to actually fix on your balance sheet. So what companies are primarily benefiting and what companies are pretty much spending? Well, like I said, Amazon, Google, and Meta. Many, many other companies are spending on capital expenditures. Of course, obviously, OpenAI is definitely up there too. OpenAI, not a publicly traded company, but I mean, still, they have a ton of investors. If anything, they are a private company, but they pretty much operate like a publicly traded company because there's so many different investors out there that are very much taking a piece of the pie. Just because a company is not on the public market, it doesn't mean that they don't raise capital. A private company, sure, a private company can more than raise capital. If you ever see the show Shark Tank, that is a prime example. Private companies, I'm a small business owner, so therefore, I mean, theoretically, I could take on an investor to raise money. Let's say, hypothetically, I want to do something business orientated and I could go to an investor, go to a bank, maybe a loan shark, and saying, hey, you want, a piece of my pie? So OpenAI does fit the narrative of CapEx spending. Now, what companies are like benefiting? Well, on the charts, it's the semis. Yeah, the semis. Look at Nvidia here. Nvidia. You're talking Nvidia just broke all-time highs fairly recently, all the way from October of last year. Pretty much we broke all-time highs. Obviously, we had a massive rally in the semis. And yeah, AMD follows suit. Many other chips as well too. Pretty much the entire semiconductor sector. This is how the stock market works. When one area of the market is spending a tremendous amount of money, that money has to go somewhere, and it goes into another sector. So for me, I'm over here with a massive AMD position, and I'm also over here with a massive software position as well too, because software is being deemed as very scarce right now, very, very scared to be in software. You can make so much money. And I truly believe that in the next couple years, as long as these big companies are going to be spending money, Amazon, Google, and Meta, that the semiconductor industry is going to be the industry to be in. There's a lot of people that are very bullish right now on Google, perma bulls. Basically, some people on social media are trying to justify a $500 price target for Google. It's better to justify AMD going to $2,000 rather than to justify Google at like a very much higher evaluation. Why is that? Because where is that money that Google is going to be spending going? Where is the money that Meta has already partnered with AMD. OpenAI is also going to be buying AMD chips. What if AMD starts, going to Google and saying, hey, you want to throw us some money? We'll give you a discount. What about that? So you got to go ahead and remember that this money's got to go somewhere. Now, you can have this flip in a snap of the fingers. You can have Amazon, Google, OpenAI, Meta. You can have them say, hey, wait a second. We're going to pull back on spending. What is going to end up happening? Well, the semis are going to lose a lot of revenue. And they will lose a lot of revenue very quickly. And then what's going to end up happening is you have now pretty much the big dogs, the opposite, such as Amazon, Google, and Meta, pretty much soaring entirely. So understand that the way the market pretty much operates and the way you can make so much money is if you really are in like the right industry. Not to mention if you are very much diversified within certain industries as well too. Obviously, for me personally, I own on my public account here of SoFi, AMD, Adobe, Hood, Palantir, Meta, PayPal, Oracle, ServiceNow. I own many different sectors. Obviously, I don't really dabble very much in healthcare stocks. I actually may pick up some industrial stock as well too. Energy, I used to own energy, especially during Rona, because that was such a big play. Now I'm very much not in that area, but and I also am watching some staples as well too. But I mean, overall, the way the stock market very much fluctuates is by different sectors and people very much being bullish and following one industry, and the other industry is very much overspending, and the industry that is not really soaring but can soar in the future, or that industry that is soaring and continuously soaring, the semis, because the other industries are just spending so much friggin' money. And that is really my prediction of 2026. I really feel that the semis during this year are going to outperform companies such as Amazon, Google, Meta. We're probably going to see even Nvidia do better than pretty much Amazon, Google, and like Meta. When I say do better, I essentially mean like they're going to grow faster this year. Pretty much then if you have, let's say, keep it simple. Let's say Amazon grows 20% this year. I'm not talking about their revenue growth. I'm talking about like their stock price growth. Let's say the stock goes up by 20% this year. Maybe Nvidia goes up by 30%. Because that money is going into that area that is just spending so much. We really got to see what happens, though. I mean, for all we know, we could be entering into very uncertain times once again. But this is very much like the overall psychology of the stock market, where a lot of people really forget that different sectors very much exist, and you gotta know how certain companies are very much spending, and what companies are going to be benefiting and what companies are very not going to be benefiting at all. Obviously, I've taken long positions in companies that are very much unpopular, such as software companies, but I very much believe that the software companies are going to be making a run. So on a closing note here for today's video, hopefully you pretty much like learned something. Like I said, if you know this stuff, just continue chiming on. That's pretty much what I do on a daily basis. But for anyone out there that is new to the stock market, this is basic stuff that you're probably not going to hear a lot, especially on like, definitely not on like the news, CNBC. They're not really going to break it down nitty gritty like kind of I just did. And they're also not going to explain to you that, hey, companies that are overspending money, they're gonna eventually hit a point where they can't spend any more money. Okay, Amazon, Google, and Meta, they're gonna get to a point where it's gonna be like, hey, we're spending so much money here. Is there a ceiling on how much money we can actually spend? And once again, where is all that money going to? It's going to hardware. And it's also going to a lot of infrastructure. A lot of industrial companies are going to be making bank. That's another thing too. Industrial companies, to build these data centers, they're going to be taking in a tremendous amount of money. Construction companies, they're going to be like, you got to build a data center. We got to build a new building. We got to go ahead and acquire maybe like a forest area, and then we got to go ahead and level out that area. We got to build, a data center. It's it's industrial. So all this money that these companies are spending, it's going into our economy, which is very bullish overall. It's a good thing that companies are spending money and they're not hoarding cash. But yeah, I mean, it's the stock market never gets old. And I love this stuff so much. And I'm very passionate about it too. So on a closing note here, thanks for watching. I'm going to go ahead and put a playlist in the description down below, pretty much for any educational content that I pretty much make. If you want me to cover something different, such as technical analysis, going over maybe moving averages, I can definitely do that too. If you want me to make a video to show how to set up like TradingView, I can definitely do that too. I'm very much open to sharing whatever. So if you got like an idea or something, definitely drop a comment below. I love each and every single one of you for watching, and stay tuned for future content. Later.